Welcome to the November Luxury Market Report brought to you by MansionArizona.com. I'm your luxury real estate professional, Jeremy Poehls, and in this episode, we're going to take a look at the luxury real estate market in Mesa, Arizona. The Mesa single-family luxury market is still a seller's market with a 26% sales ratio. Homes sold for a median of 97.83% of the list price in October of 2022. The luxury benchmark price remains at $695,000. Total inventory was 246. Total sales were 63. The price band with the most sales was $800,000 to $850,000 with 10 homes sold. The price band with the most inventory was $1.1 to $1.5 million with 36 homes available. The median sales price was $860,000, up from $825,000 last year, a 4% increase. Total inventory is up 73% compared to last year. Total sales were up 15%. And the days on market were 49 days compared to 28 last October. Still firmly a seller's market, the last 5 months are showing the Mesa luxury housing market is very stable and not looking like it's going to dramatically shift anytime soon. It also shows that compared to some of our other luxury market reports, that working with an agent who knows your area is vitally important. If you want to see if this trend continues and to see the awesome luxury home tours we have lined up, make sure you subscribe to the channel and select that bell icon so you're notified when a new video is released. Now, for some insights on the greater luxury market from our partners at the Institute for Luxury Home Marketing. Challenging times in a market full of contradictions. There is little doubt that the luxury real estate market is facing some interesting challenges that even have experts contradicting each other in their predictions and assumptions. Statistics in many luxury markets still show that they are favorable to sellers. So why are homeowners remaining hesitant to list their homes? For the fourth straight month, the number of new listings entering the market has fallen, with increases in inventory levels mainly attributed to stale listings lingering on. Both sellers and buyers are sitting on the fence, with neither side wanting to jump into this unconventional market unless presented with the right opportunity. The average days on market have increased compared to last year, but relative to pre-pandemic averages, homes that have sold recently are still selling twice as fast. Outside influences, some of which are not typically identified as being impactful on affluent buyers and sellers, are also causing disruptions to their spending habits, such as concerns over a potential recession, interest rate increases, and a volatile stock market. Mortgage companies are offering creative alternatives, but even a slight dip in recent rates isn't driving buyers to purchase, despite statistics from the National Association of Realtors and the National Association of Home Builders and Realtor.com showing demand still outweighs supply in many price points, property types, and locations. All indications are that those who need to buy and or sell are continuing to do so. But for those whose criteria are more based on wanting to buy, there is a hesitancy, as they hope inventory choice will improve and or prices will become more favorable. Will prices fall? This is a big question, and yet the jury remains cautious as to what extent prices will fall and which locations, property types, and sizes will be most affected. Since July 2022, there's been a slight but continued decline in the median sold price for single-family homes, dropping from $1.311 million in July to $1.275 million in September. However, in October, the median price climbed back up to $1.31525. In contrast, in the attached luxury property market, the median sold price increased from $832 in July to $890 in September, only to drop to $878 in October. These are not dramatic swings, but they show there is still some volatility in the luxury market. Interestingly, a recent article by NASDAQ One speaks to an increase in the ultra-wealthy currently investing in luxury real estate. As the value of the dollar remains volatile, we've seen more clients looking to park their money in a low-risk luxury asset whose likelihood of appreciation is higher, forged by historically beautiful surroundings, neighborhoods, sprawling acreage and square footage, and newly renovated constructions. According to their article, The Trend Report in 2022 by Coldwell Banker Global Luxury, they foresee the value of luxury properties will continue to appreciate. Both cite the historic gains in this segment of the luxury real estate market and explain that prices will oscillate by month or quarter, but how the appreciation is clearly recognized by investors and homeowners as being a long-term decision. Prone to behaving cautiously, the affluent have begun to signal that they are looking for more stable, long-term investments to protect their wealth and give them some peace of mind. A shift in mindset. The trend report also sheds light on why affluent homeowners have shifted from the fearless and FOMO buying of the last year to taking a more considered approach. Between rising economic uncertainty, stock and crypto market volatility, climate change, and 2 years of living through an unprecedented health crisis, wealthy buyers have begun turning toward opportunities that give them long-term financial security and quality of life. Real estate generally offers reliability and stability for those investors who are able to play the long game, hold on to their assets when the market trends down, and wait until prices start to rise again. Equally, with interest rates more than double compared to 2020, 2021, and the first quarter of 22, many homeowners recognize that selling their home to purchase another would be an expensive replacement unless they need to sell. This has led many sellers deciding not to put their homes on the market, which, when combined with buyers taking more time to make their decisions, has ultimately resulted in the slowdown of the market. Demand versus supply. It is supply rather than demand that is creating the bigger conundrum in the market today. Buyers are still eager to buy, albeit at a slower pace, but there's simply a lack of new inventory entering the market. Inventory levels may have increased compared to last year, but without new inventory, the return to pre-pandemic levels is unlikely, adding a further complication for buyers as current levels are unlikely to create the downward pressure on home prices they anticipate. According to NASDAQ, there has never been more liquidity on the buyer's side for quality homes. But until sellers' price expectations start to align with buyers' perception of value, we will continue to see this contradiction in the market. Not all markets are created equal. After 2 years of affluent buyers heading away from urban centers, there has been a significant return to traditional centers of luxury in 2022. And old favorites across North America such as New York, Boston, Chicago, Toronto, and Vancouver are seeing the benefits of this demand. While prices decreased during the pandemic for the smaller city footprints, they subsequently became comparatively more affordable against the escalating values seen in rural destinations, emerging markets, and resort markets. Much like the ownership of luxury real estate, these metropolises have once again been recognized by the affluent as locations that will hold their value over the long term, seen equally by domestic and returning foreign investors as a safe investment haven. In contrast, the market that benefited from the demand frenzy of 2020 and 2021 and the subsequent influx of buyers may see the greatest cooling off during the last part of 2022. Indeed, compared to 2021, the velocity of sales has already dropped significantly in many, and expectations are that demand and prices will settle into more mature rhythms in 2023. Luxury market still offers opportunity. While there's much debate about how things will play out over the next 6 months, like all markets, there's always an opportunity for those who are ready. There are niches in every market, whether moving to a location that affords better cost of living, recognizing luxury pockets or property types that are in the next demand cycle, or simply biding one's time in anticipation of finding a property that is below market value. But more importantly, according to a survey conducted by Coldwell Banker Global Luxury for their trend report, it seems that luxury real estate remains an important asset for the affluent. Regardless of an affluent buyer's financial profile, there is still significant confidence in the luxury real estate market. Regardless of an affluent buyer's financial profile, there is still significant confidence in the luxury real estate market. According to our survey, nearly 90% of respondents believe in the stability of owning property. Even if some buyers have dropped out of the real estate game due to fatigue, frustration, or even hesitation this year, they may be primed to return as inventory levels improve. The art of buying and selling in this market needs a critical and analytical approach. Understanding the realities and setting expectations accordingly will ensure your goals are achieved. If you're thinking about buying or selling luxury real estate, reach out to us at mansionarizona.com. We'd love to set up a free consultation with you to look at your options and see what the best course of action is for you. If you have questions about living in Arizona, reach out to us as well. We're happy to share any and all information when it comes to living the luxury lifestyle in Arizona.